What's going on, guys, and welcome back. Today, I want to talk about CCIV. CCIV is a blank check firm by Michael Stewart Klein, and there's a proposal to merge with Lucid Motors. I want to talk about specifically about Lucid Motors and what I think about the stock. We will be diving into technical analysis regarding the stock, some fundamentals about the company, and whether or not I think the merger is going to go through. So, let's get started. So on the day, CCIV is down 8.5%. On the week, we can see it's exploded up 42%. On the 1 month chart, it's up around 200%. And on the 3 month chart and the inception of Churchill Capital, it's up around 462%. So for the people who don't know, this is a SPAC. It is a blank check firm, which is looking for a company to merge with. And usually most SPACs, when they merge, they go up, 20 to 30%, depending on how good the quality of the company is and at what percentage the company acquired it. For example, if a blank chip company acquires, um, half of Subway at 100 billion valuation, the SPAC would go down because the valuation was too rich at $10 a share. So most SPACs either at $10 and $20 a share. And that's due to the fact that that's how much cash they have, meaning that if they were to liquidate, that's what you would receive back. So at $10, SPAC would be considered very safe pre-merger. So these companies, blank check firms, they try to find other companies to merge with, and most of the time, these companies are very low-lying companies, not very popular in in the economy, and they don't have the facilities to go to the IPO market. However, in the past couple of months, we're seeing very good high quality companies going public through SPAC, such as DraftKings and possibly Lucid Motors here. So I've had this stock in the past. I've bought it at around around $18 and $24, and I've sold out basically at 38 and 40, and right now it's at 54. So I want to talk specifically about Lucid Motors and why I think this can be one of the best SPACs out there and why I sold specifically, but that doesn't mean you should not buy or sell. So Lucid Motors is an electrical vehicle car company based in California. So why I like this company a lot compared to any of the other EV stocks, such as Neo and Hyliion and Lordstown Motors, is that I believe Lucid Motors is the second best electrical vehicle company out there, right next to Tesla, I would say, in terms of competition for the future. I believe that Lucid Motors can compete with Tesla in certain sectors, certain car manufacturing sectors, and I will dive into more about that in the future. When I mean certain sectors, I mean high performance, high impact, and high cost vehicles. I believe Lucid Motors can be the number one uh, manufacturer of luxury cars. Uh, but I still do think Tesla is the number one overall EV producer in the world by far, and it will continue to be like that. But I think Lucid Motors can grab, a big share of the EV market by going specifically into the luxury sector. So their performance is, very, very good. Actually, it's one of the best in the standard EV industry. Their Lucid Air has a 517-mile range and starting on 70,000, the max horsepower of 1080. So I believe that 517 is a record in terms of a mid-class car, and that max power is second or third behind Tesla's Model 3. So if we go to reserve now, we can see all the cars that they're offering. I believe the only car that you can purchase in the next 2 years would be the Air Dream Edition, which is coming out Q3 of 2021. So it's not too bad. There's some car companies and some battery makers that say, oh, we won't have anything until 2024, 2025, and their valuations are, 30 billion plus. So here, if you look at their Air Dream Edition, it's $161,500, 503 miles projected range, which is pretty. It's really good, actually, in my opinion. However, as you can see, they are touting the more expensive industry $161,000 is a pretty expensive car. And then I believe in 2022 they have the Air Grand Touring, and then they go into the more cheaper cars. You may not see significant differences, but I can assure you that in the back and in terms of like the luxury and the accommodations with the car, it's pretty good. But what would be interesting is how they execute their lower cost cars. I believe Tesla started out with the Roadster, which was their most expensive car, in order to gain capital into the company. However, I do think Tesla will run away with any car below 100,000, but above 100,000, I think Tesla shifted their focus away, and I believe Lucid is in prime position to step in. And companies like NIO, even though they're producing cars, I believe any Chinese company has a risk. So now, since we know all about Lucid, let's talk about valuation and why I think it's going to merge and whether or not I will be buying the stock. So many people have understood that Lucid Motors will probably merge with CCIV. It was not very clear 2-3 weeks ago, but now it's almost confirmed. Many news stations such as Seeking Alpha, Wall Street Journal, Bloomberg have all came out and said that, yeah, Lucid Motors planned to become public on this Tuesday, so in 2 days, meaning February 23rd. I do believe that the deal will go through, and that's why we saw such a big spike. They're essentially pricing in that they're merged. So at $10, they're supposed to be worth $10 due to the cash amount, but since people believe they're going to merge, it's going to have a better valuation. So this article basically talks about the valuation about the company and whether or not things will go up or down from here. So when I bought the stock at around $18, $24, I had a price target of around $35 to $40 a share because I thought the merger was going to happen between 15 and 20 billion dollars a share. So meaning at 20 billion, meaning at $10, they were planning to merge part of the company at a 20 billion pre-merger agreement. So at 40 billion, 20 times 4, that's $80 billion. And for a company which hasn't sold a car yet, I thought 80 billion was pretty rich and it was a pretty decent valuation to get out. But what I didn't realize was one of two things. One, the valuation wasn't confirmed. Those were just rumors. And two, NIO, a Chinese competitor in a similar industry in China, is at 90 billion, right? Even though they're producing cars, China has more risk and investors were okay with that. So when I look at Lucid, I think, at current market times, this can change. It should be worth, 80 to 100 billion pretty easily. And I do regret selling it because now it's coming true that the valuation is around 12 billion. So in order for us to get, 100 billion valuation, the stock would have to be $80 a share, and right now it's at 52.94. There is still some upside, but again, there's a lot of coherent risk here. If the merger somehow doesn't go through, which is less than a 1% chance, you're looking at an 85% loss because the stock will go from 55 to 10, which would be kind of devastating for your account. But if they do announce the merger with proper evaluation, it would be great. So for now, I think CCIV, it all depends on that magical number. If it's between 10 and 15 billion, I think the stock will go to around $80 a share. But if it's 15 to 20, I don't think the stock's going to go up because at 20 billion, you're looking at already, times 5. So that's 100 billion already. If it's 20 billion valuation at $10, so that means it will be 100 billion at 50. So then, the stock might actually stay the same or even go down, which I don't think will happen because I think Churchill Capital will get a good deal done in those short coming weeks. So do I recommend buying the stock? Well, it is kind of risky at this point. I did buy 18, so there was less risk. I knew at 18.24, if the merger didn't happen, I would only lose half the money. By this case, I would lose, 85%, which is, outside my risk tolerance. But I would look into debit spreads and maybe some call options to see if the premium is cheap and to see if you can take advantage of this frenzy without, putting a lot of capital, not tying up, 1,000, 2,000 shares, which can blow your account. And at this point, I'm just waiting for the valuation. If the merger goes through, if it's at between 10 and 15, that's great. But if it's 15 plus, then you get kind of sticky. So there you have it, folks. CCIV, I think, will merge with Lucid Motors. Lucid Motors is one of the best EV companies out there, especially since it's US based. There's a very, very little risk. Management staff is great in both Churchill and Lucid Motors. I do recommend buying the stock if you want to dabble yourself in a little bit of risk and EV sector. Have a good day.